Have an interesting little anatomy of a trade segment to talk about today. End up making some money with I don't know, kind of a modified play. So I'll share that today. Um, so far, so good. We got some earnings plays to discuss. We have some news, breakers trades looking pretty good. Let's go to the zero DTE right now. Dash showing some profit. Carvana showing some profit. XSP, this is for engineered options for next week. We're good on that one. Walmart out to next week, up about 72%. So Walmart earnings, HPQ is a pinch, but I'd say Walmart, Carvana, DoorDash looking to close out for some profits today, which is a good thing. And then we have quite a few trades that we took this week for Pinch Point Scanner. We review those. If you didn't have a chance to attend the class and trading session yesterday, we now have, I think, 7 or 8 live trades running from this week. So come and check them out. All right, everybody. It is 9 o'clock. Let's officially kick things off here for the daily profit plan. Chat is open for everybody. Yes, yes, yes. It is good. Okay. Good morning. Good morning. Come on in. Alan, we should be able to post that inside the classroom. Deanna, can you confirm that for the pinch point session yesterday on Zoom? It should be inside your classroom.
Oh, I just messaged you. We're uploading it to Vimeo now, so it should
Okay.
be 15 minutes or so.
Okay. Perfect. Yep. We'll get that posted shortly. So just so you know, Alan, also in the trade tracker and the Telegram channel for Pinch Point Scanner, all the trades were added. So we had trades yesterday. Let me find it right here. Pinch Point. We had trades added on SMCI, BYD, CRBG, AR, HAL. And then these were the ones we did earlier in the week. AVGO had 2 trades looking to buy support. HPQ is a long strangle. MNST, this is a pending order. I'm looking for a very small risk, high reward trade. Earnings, I think, are next week on Monster Beverage. And then SPY, we're trading the big fat squeeze and pinch that we have right now in the SPY going either direction. Looking for a measure move to like 726, we get paid on that one, or a push down to like 650, we get paid on that one. So either way, looking for some profit. Cool. All right, Silas, if you're here, let's see some camera. Let's show some face. What's happening?
Hey guys, good morning.
There he is. Hey, how are you, man?
Good. I didn't want to interrupt the flow, so
No.
you're doing your thing.
No, all good. So, everyone, this is Silas Peters. He's coming to pop in for a few minutes this morning. Silas and I have a really exciting session on Sunday night. It's going to be 7 p.m. Eastern time. We'd love everyone to tune in and join. Silas, I think you have one of the coolest indicators I've seen in a while. So if you've got a little something to show us this morning, feel free to grab the screen here and take it away, man.
Awesome. Thanks so much, Chris. Thanks for hosting me on. And good morning, good evening, good afternoon to everybody here in the world. And the sound coming in okay? I'm going to move my mic over. Sound coming in okay?
Yeah, sounds good.
Okay, cool. So let me share my screen real quick. I promised Chris and the team that I'd keep this very brief because we are going to go live on Sunday. So we're very excited about that. And thanks for tuning in this morning. Happy Friday, option expiration Friday, that is. So what is this new indicator and new tool that we're going to be talking about? Well, essentially, this is a zero lag buy sell arrow that isolates tops and bottoms down to a single candlestick. So essentially, green arrows are marking bottoms, red arrows are marking tops, and they can be used on any time frame, any instrument. And in fact, these exact arrows that we're going to be covering on Sunday, called the parabolic run in gold, back when it was trading for just $1,600 an ounce, the historic rise of Micron or MU before it surged nearly 500% in a year, and the number one stock of 2026, SanDisk SNDK, which is already up triple digits. In fact, these arrows are so powerful that they even call the last 3 major market tops down to the exact day. And we will be very carefully looking for those exact same arrows here in the coming possibly weeks or months. But we're talking about the market top right before last year's Trump's tariff talks, the brutal 2022 bear market, and even the 2020 COVID crash. That's 3 separate times that these arrows could have helped protect your retirement account, or 3 separate times you could have cashed in while everybody else got blindsided. So what makes these arrows so precise is that, excuse me, they are a leading indicator. So, excuse me, what is a leading indicator? Well, we know that leading indicators measure shifts in momentum in buying or selling pressure before price moves, helping you anticipate price action instead of reacting after the fact. Okay, lag indicators are derived from past price data and confirms a move only after the trend is underway. And we know that that kind of lagging hindsight is not useful for anybody. So examples of lag indicators: Bollinger Bands, moving averages, stochastics, RSIs, MACDs. All these indicators are calculated from past price data, which means they only confirm moves after they've begun. So, for example, if a stock is above the 50-day MA, it's generally considered bullish. If a stock is below the 50-day MA, it's considered bearish. But the problem is momentum indicators like basic moving averages, RSI, Bollinger Bands are really too slow for precise entries and exits. So it's really like using yesterday's weather to determine today's close, driving a car and looking in the rearview mirror, and chances you end up where you're trying to go, zero, and you get yelled at by your wife. So what you need is a leading indicator that's designed to anticipate future price action using price action, one that helps you target precise tops and bottoms down to a single candlestick. And you see, about 10 years ago, a little bit more than 10 years ago, when I was working at the Chicago Board of Trade, I spent my days executing large block orders for hedge funds, banks, and commodity trading advisors. And that experience gave me a front row seat to see how price really moves at the institutional level. And I'm talking about how large algorithmic orders are worked behind the scenes. And so what I learned is this: when institutions need to build or unwind a large position, they do not do it all at once. Otherwise, the share price moves too fast and they get bad fills. So, what they do is control the bid and the ask price to work that large order. Now, if you're not familiar with the bid and ask, let me explain it to you in simple terms. Whenever you see or whenever you buy or sell a stock or any asset, there's a bid and then there's an ask. Okay, so the bid is the price a buyer is willing to pay for an asset, and the ask is the price a seller is willing to accept for an asset. Okay, and that bid is the highest price someone's going to willing to pay for your shares, while the ask is the lowest price someone is willing to sell shares to you. Think of the bid and ask as a weighted scale that moves in real time. When there's more buyers on the bid and sellers on the ask, then that tips the scale to the upside. And that's bullish bid concentration. When there's more sellers on the ask than buyers on the bid, then that tips the scale to the downside. And that's what we call bearish bid concentration. And the key is identifying if bid concentration is bullish or bearish in real time. Because as you're about to see, bid concentration leads price action. So, for example, if you look at this chart of Mosaic, as you can clearly see, price action is trending lower. But you see that green line that's starting to tick up? That's bullish bid concentration. In other words, CTAs, institutional funds, are accumulating shares or whatever asset that may be at this time. We're just happening to look at Mosaic, but the price hasn't moved yet. From there, we'll see a very special but very important green arrow that will automatically print onto your chart, and that's our signal that we should look to jump into the trade. So I want you to join Chris and myself for the world premiere, and I think we're going to have a link in the chat. What we're going to talk about is how these arrows not can, but do nail tops and bottoms before price turns, when we can get that down to a single candlestick. We're going to talk about the hidden bid concentration that flips bullish or bearish before price reacts, why a stock can be rising, analysts can be bullish, and a crash signal is already lurking beneath the surface. And then I'm also going to share a little known stock that just flashed a fresh arrow and why it could be my number one buy opportunity for 2026. I'm going to give all that to you for free. And most importantly, how you can get these arrows up and running onto your charts literally in less than 10 seconds. And so I'm super excited. We're going to be going live this Sunday, February 22nd at 7 p.m. Eastern. Be there or be square. And I think there's a link in the chat. And I want to give a shout out again to Chris and the team for letting me come on and share this with you. I'm very, very excited. And I hope to see everybody there.
Yeah, we'll get it going, Silas. This looks great, man. I know that you and I will be talking later on today. I've got some questions for you as well to bring some more information to everyone on Sunday. So I think this is one just really great like visual piece that people would be loving for 2026. I mean, we have one of the biggest dispersion trades that we've seen in the markets in a long, long time. We have stocks that are up over 20%, down over 20%. So what I've been saying a lot this year is the indexes aren't doing anything yet. Under the surface, stocks are moving all over the place. So I think this is a stock picker's dream, and you're doing a pretty awesome job of calling those signals up or down. So how's your year to date? You doing okay?
Great, and this chop that everybody's talking about, and the indecisiveness of the indices. If we have some time on Sunday, I'd love to go through how this works on an intraday basis. So this is like been a trader's dream, especially with the volatility, some of the metals, the energies, bonds. We trade anything that moves, right? So we're price action traders, and so we absolutely love this kind of action.
Okay. Love it. Everybody, we'll keep dropping the link today. I know we'll fill up here in we'll probably get another 100 plus people in the room today for a daily profit play. So, Silas, anything else to add? I know I'll talk to you later today, but looking forward to seeing you again on Sunday night, 7 p.m. Eastern time, 5 p.m. my time. Silas, where are you at, by the way? Where do you live?
I'm in LA, which is
LA. Okay. Even earlier
on the Gulf Coast.
Okay.
So down here on the Gulf of Mexico, or Gulf of America, I guess it should say. I don't know what it's called these days, but
do we officially rename it?
I don't know. Hey, but anyway, guys, we got 20 minutes here until the open. It should be an exciting day. Thanks again, Chris, for having me on, and
of course,
thanks everybody for listening. And I can't wait to see you guys on Sunday.
Okay, thanks, Silas. We'll see you soon.
Right, talk soon.
Bye. All right, everybody. I'll try to get the screen share back here. All right, so I'll have some good questions for Silas. He and I are doing a read through this afternoon and getting prepped for Sunday. And actually, the first thing I was thinking about for his indicator was, okay, what's the average time frame he likes to use it on? What are his best practices? And also, does he like it for intraday activity? One thing I'm thinking is, we trade a lot of 0DD here for daily profit play. If there's ways to call some of these aggressive tops and bottoms and turning points in the market, could we look at like a 1 to 5 minute chart, 5 to 15 minute chart, perhaps intraday? So if you have some stuff like that to show, then guess what? I'll be adding the old alpha arrows into my arsenal. So could be pretty cool stuff. All right, so you see more of that on Sunday with Silas and I. We'll share the link in that, and I can, if you want to hit me up for an email, you want to ask for the link for that, I'll happily share that going into Sunday's presentation. So everybody good on the screen? Daily profit play, yes. So daily profit play yesterday. Here was the market inside. It was a weird day yesterday. I mentioned in my Telegram update for today that I was going to share a little bit of the anatomy of a trade. I ended up grabbing a trade yesterday. I didn't make this an official trade alert. I'm not sitting here bragging about it. I actually got on the road and put these trades in and just let them go for the day. Ended up making $459 on a little, I call them mod iron fly, which is really the premise of the trade is an iron butterfly, which we've talked about in the past. And so what I did is I put 3 traps out there, each one offering about like this one was offering like 2 to 1, and these were offering like 4 to 1. And I'm like, well, if I am getting the market to be somewhat neutral for the day, I get a 2 to 1 opportunity. Worst case is we settled for kind of a 1 to 1. So that's kind of how the result added up is this one was offering like $1,000. Let me just circle these really quickly. This top one that you see here that lost 205, that was offering like $1,000 if I was in the profit trap between 68, let's say 68.10 to 68.40. We came down to lows yesterday around like, I want to say the low was like 68.33 yesterday. Let me check that price. Check was 34. Okay, I was one point off. So 68.33. Let's see that low. I think that was exactly right. 68.37, 68.30. Yeah, I was right. 68.33. I knew it. Okay, so that low yesterday intraday was 68.33. we bailed on the reverse iron condor yesterday, and you can see for good reason. It was just a weird day. We had such a wide look to the gamma levels yesterday. Everything was like kind of open transitional spacing, and I bailed for a small loss on the inverse iron condor, took a win on my daily profit play where I did some 10 deltas and ended up grabbing a small profit on the day. But again, like we left the session with me, ending yesterday at like, all right, well, I pretty much washed the day. I was up $5, whatever. And then I just kind of sat in my hands and waited. I knew I was going to be on the road in a little bit. So I'm like, do I force a trade? Do I just, do I expect price to be this calm all day? So what I did is I looked at building out, some modified trades, which was, okay, if we have the market giving us some type of movement, I had these kind of three areas covered. This one was offering about let me use a black dye here. So this middle one was offering about a 2-to-1. This one was offering about a 4-to-1. This one was offering about a 4-to-1. Now, we've talked a lot about butterfly trades in the past where they're, a butterfly spread that could offer like 10-to-1, maybe more. That wasn't the trade. And the reason I didn't do that is I was playing around with some of the levels, and I was really trying to keep the cost basis low, because the one thing that's difficult sometimes is when price is in the middle and it's going to stay in the middle. If you're forced to trade around the at the money prices, it's very difficult to get like a very asymmetric trade. We could put on an iron fly and talk about, oh, look, there's 2-to-1, or there's a big 1-to-1, but it's going to be this big wide open area. The trade is fine. I'm trying to think. We looked at an iron fly yesterday. It was like 20 or 30 wide. You'd have to risk, $700-800 to make maybe 1,500, maybe 2,000. Did it work yesterday? Yep, it was perfect. But those trades are never easy to put on in the morning and think like, oh yeah, price is going to go absolutely nowhere today. Nobody knows that. Nobody knows that, especially holding this thing all day. So anyway, what I mean by profit trap is the way I built the trade is, so I ended up selling, I think the trade that won yesterday was a 68.50. So I sold the 68.50 call. Okay. So I sell the 68.50 call. Now that's in the money. And that call, I end up taking up to, I think I was up to 90. I went 68.90 up here. Okay. So that is a trap for my call side. Now the puts, I sold the 68, I think it was 80, 68.80 down to 68.40. Okay. So the way that trade actually works is I am profitable if price is inside of my sell strikes. And the way that option graph looks is I have my risk, I have my reward, and I have my risk. So it looks a lot like an iron condor, right? But the reason I called it a modified fly is because basically I'm thinking, well, if I just sold here in the middle, and I look to see like, okay, I sold in the middle, get enough premium to sell that it gives me an iron fly looks like this. You get a big profit trap. You got, fairly low risk. Iron flies are kind of like 2-to-1s or 3-to-1s. But the reason I modify this is because I'm like, all right, well, price seems pretty calm. We have the opening price. We've got that. If you remember yesterday, 68.45 was our positive and negative gamma pivot point. And then the gap fill was up here around 68.80. So what I tried to do was position myself for this one to win. If price is going to stay between 68.45 and 68.50, I'll make about $500. And that did work out yesterday. Now above this, because I had a potential profit trap about $500, below and above, I put in another trade that this one was really cheap. This was a max risk of 50 cents. This was a max risk of $2. So I made $500. I lost 50. I lost 200. And so I'm still up $250 on the day. So I settled okay. Now, had I gone into this profit trap, I would have made about $1,000 on this one, and I would have made about $900 on this one. So I could have lost the 500 here, still walked away with a small risk, and still netted some profit as long as I kept price within probably about 120 point area. So I don't know. I guess when I was back against the wall, like, I think I want to find something I can maybe, make me some profit today. Let me figure it out, because it was a calm day. But what I didn't want to do is just put on a trade and just number one, assume that a daily profit play late in the day is going to be a good trade. Because if you remember, daily profit play starts out with an expected move like this. And as the day quickly unfolds, I mean, a zero DTA, the time works so quickly that the expected move just shrinks all day, right? So if I waited too long in the day, the expected move the broker shows is getting smaller and narrower. And that way, any direction that we have in the later parts of the day, I'm screwed on that trade. So that's why I don't like taking daily profit plays later in the day. It's like I want to be in that trade, pretty early within the first, 5 to 30 minutes of the trade. That gives me the biggest expected move, and we'll see how the markets kind of behave according to, the remainder of the day, right? So anyway, so I improvised like we did yesterday. It's like I didn't like I thought the reverse would be fine based on the gamma profile we saw yesterday. I couldn't believe that we sat here in session yesterday and the markets just did absolutely nothing. So we made a executive decision, bailed on one trade for a small loss, took a small winner, washed the day. It's like, okay, I mean, no harm, no foul. Let's figure something out. And so I knew that I was getting on the road, and so I placed a low box trade here that helped me, grab some dollars. I was fortunate, but I was watching it closely. Like, we're going into a baby doc appointment and I've got my phone and I'm like, well, I accept whatever happens. So if we were below this level, it would have started to creep into my profit trap down here, which might have actually paid me more money. But I would have taken the full loss for about $500 on this one. So, it worked out fine. It's like small loss here, manageable win. And like, who said that? Joe says that's a lot of trades. It is a lot of trades, right? I mean, I had 3 groupings in the market yesterday, and there were some overlaps that hopefully just helped me capture some profit, right? So there's a time and a place for a trade like this. I mean, yesterday was kind of an interesting day where the gamma. I mean, today is. I'm not going to say today is similar. Like today, we've got all sorts of gamma levels. Now, remember, it is a major options expiration. There certainly could be some more volatility to finish out and close out the day. We have a plus minus 52.37, by the way. So I mean, I think Larry said it earlier. Make sure that you are closing or using the weekly expiration, not the AM. So if you go to, let's go SPX here. SPX, do not select the Feb 20 AM expiration. You don't want to use that one. Make sure you're using the weekly today. So our trade weekly, you can see here, we got a 52.37. That's the plus minus move on the day. So we'll take a look at that. Futures this morning, it was down slightly. And we'll see what the OPEX has in store for us. But again, you can see some gamma levels. They're really freaking out there. The market expecting to move 50 points. I mean, how the heck do we get to 7,000 today if the market's only moving 50 points? How do we get to 6,800 if the market's going to move only 50 points? Right? Like, we're probably going to see some movement today. If these are right in any way, shape, or form, we're probably going to see some movement. Right? So that means, I don't know, I want to be somewhat careful with my trade decisions this week. Today, All right, so those are my gamma levels. Let's get a plus minus here. We've got 52 outs around. It's 52, 53 points today. Futures is down slightly. Futures down not down slightly. This is like a 0.13, now to 0.38. We are sliding a little bit lower this morning. All right, it's going to be interesting again. Let's go down. So we're looking at an open about here. And okay, so we're going to open up right about there, and let's go 53 points. Okay, right around 50. I've got 52.37 on my platform. I'll try to get as close as I can. 52.50 right there. So that should be, oh, fudge. Dang it. I want to try to get that gap. So about 0.3. There's our gap lower. Let me get a number on this. Then go 52 points. We probably need to go about 67, 67.83. 67.83. Okay. So that blue line's kind of our market maker move to the downside. We're going to take the close from yesterday and go up. We'll go up 53 points. There's our 52 and change. 69.14. Okay, so there's our efficiency of the day. Now, are we going to stay efficient for the day? I have no idea. Right? We've actually had so this is Thursday last week. And from Thursday last week, efficiency Friday, efficiency Monday, efficiency. Actually, this week was a shortened week because of the holiday. So efficiency Friday, efficiency Tuesday, efficiency Wednesday, efficiency Thursday. Will we have efficiency Friday? We should, but that's a big dispersion of gamma, right? So what happens today? Well, we're going to open up a little bit lower. I mean, if the Bears are going to start clawing again, we've got 6,800 down here. We have 6,875 as well. I mean, a trade that'd be pretty cost effective today would be looking to build a little bit of a butterfly trap down here. Okay, building a butterfly trap here. Or if we can get back above these highs, building a butterfly trap up here. So, you know, what you don't have is this trade. If there's absolutely no movement today for OPEX, then you're going to be in this dead zone again, right? But if this was, you know, out of the money far enough and wide enough, if we went like 20 wide, for example, and price is gravitating towards this area or towards this area, that trade is probably going to offer, I would guess like 100 and some percent profit. So if I took both of these trades, I would imagine if I'm getting one of them right directionally, that we're going to see enough profit to close out for a net winner. Right? I just want to make sure it's cheap enough to take this trade. So if we did like this low is like 67.76. If we did like a 75 and went 25 wide, something like that, and we gravitated towards that, or if we did like 69, let's say 69.20 and went 25 wide. I mean, yes, you're leaving a dead zone here, but if price moves at all today, these could be pretty nice winners, one way or the other, enough to make some profit because you're going to max the risk. Like if this was a, you know, let's say a $2 debit or less, and all of a sudden, you know, we get some directional move and this is offering $200 to $300 profit. I mean, if you're 25 wide, to get $300, $400, $500 out of these trades is not that difficult. And max loss on one would be $200. Okay. So again, I mean, if I have a crystal ball, I know exactly what to do, but I don't. So I'm just pulling in the clues that I have. Our VIX is still elevated. You know, this is why yesterday was so weird to have a VIX at 20 and the market moved like even through the entire trading day, the market barely moved. 54 to 79, we had a 20-point move intraday. You know, that's what, 20 some points intraday. And then from the opening price around 55 down to 33, again, like 20 some points up, 20 some points down. I mean, plus minus yesterday was 45 points. We moved half of that. That's a very kind of decisively sneaky, quiet day. And we haven't seen a quiet day like that for a while, considering the VIX has been at 20. Can you add something in the middle? Yeah, if I add something in the middle, I'd have to add one of those, like, you know, modified. I'd probably modify the butterfly or do like a iron condor in some sort, make it like a 2-to-1 opportunity. Okay. But if I add one in the middle, now I need my up trade or my down trade to be even bigger because I have to take into account that I've got full risk on you know, all the different positions, right? So, you know, anytime you're adding if you're thinking of this as like, okay, can I get a trade in the middle? Can I get a trade in the top? Can I get a trade in the bottom? If you add all three of these trades, you need one of them to be a big enough winner to offset the other risks. Now, the upside downside trade will be cheap enough that if you get out of these trades early in the day, there's a way that you could close this for a partial loss, and take this for a win. And this is a big enough win intraday that these, you know, haven't really had like the full losing effects of like, okay, this trade is dead wrong, because late in the day, you're going to know that it's dead wrong based on the probabilities. Does that make sense? So anytime you're trading like at the money in the like where current price is at, it's going to be a bit more expensive to take those trades. You're going to get the smaller reward to risk. Okay. So the way to trade in the middle is, remember, I mean, daily profit play every single day is based on market maker efficiency. If the market moves up 52 points, if we did a daily profit play, we're selling up here, we're selling down here, and we are planning on the market for at least the morning to remain calm. That makes sense? Like, that's all we need it to do. It's like, we don't need to sit here and hold this thing all day. We need the market to remain calm. That's all daily profit play is. Okay. But look at 6,800. Look at 7,000. Those are big numbers. Like that. That's a pretty decent gamma level. I know on the SPY, let me go SPY here. I know on the SPY, we have like this huge put at 680. Okay. So here is a 675 on the SPY. And that's it. I mean, if you look at 0 DT for the SPY, it's like, I mean, let me see where gamma is today. So if we're opening, and we will, so we're down here about 0.39%, we're opening in negative gamma. Okay, we're opening negative gamma, which means we're probably going to be drifting lower. All right. So, where to? Well, 6,800 seems to be the magnet for the day. If we gap down a little bit, push down directionally, that could be that plus or minus move on the day. We might test this level. One thing that we don't know is, do we test this level and do we bounce, or do we test this level and do we break? I don't know. Okay. So, it's a calculated risk. That's all it is. So I don't know. I think that if we're going to open a little bit lower, I mean, it's opening bell, so it's go time here. But let's have a look. So I've got an open right around about 68.43. You can see the sliver of price right there. So I want to see how low I can go. I mean, as long as I'm selling puts below like 67.75, that should be adequate. Okay, I'm going to get rid of the green lines for now because we don't have a trade in yet. But those blue lines are going to represent our plus minus. Let me make sure that's accurate. So we open here, go about 53 points. So that's a little bit high. Okay, so let's go less the nope, we're still at like plus or minus 49. VIX isn't running or anything like that. So let's keep an eye on this. So we open here. We're going to go about 53.6787. I'll adjust this. 67.87. All right. So that is going to represent kind of the market maker's move for the day. We shouldn't see price closing below this. We shouldn't see price closing above this. And it's an OPEX. So let's see what real-time gamma looks like. I mean, I'm getting my biggest gamma is around 6,800. I think this trade is pretty cheap. Let's see if we can get a cheap trade going this morning. So if I get a 6,800 or lower, let me try to get like the 75. If I go 75, 25 wide, what's that going to look like? So for maybe $2, if we get some direction, that would pay really, really well. We are in negative gamma. So if I went 20 wide, it's a bit, I mean, this is pretty cheap. I mean, for $1, that's $2. If I go 75, let me go 6,800. So that's 25 and 25 wide for under $2. We're at $2. This one could work. Question is if price is going to do anything, I mean, look at you see this stuff every day. It's like, I usually don't see gamma this far off. And if I'm looking at real-time gamma right now, it's like, I don't have anything at 7,000. So the fact that's sitting on my chart, it's like, that just seems like a tough price to touch today at 7,000, right? That's way outside the 100% ATR. I feel like the probability is we're probably dealing with more of this, 6,800 zone. If we get back to positive gamma, that's got to be above 68.65. We can maybe get back to 68.80 today. So, all right, let me just take a look here at the day from a daily profit perspective. So on the upside, if I'm looking at gosh, it's like that gamma is just so freaking wide. All right. Here's what I'm going to do. The gamma stuff is a little gnarly, at least on Tanuki trade. I mean, this is trading views indicator, so there's a lag here. This is my more real time. I don't see any flows up towards. I don't see anything above 69.10. So I'm not discounting the 7,000, but I do think it should be difficult for prices to get there. Okay. Probably the first order of business is to manage some of our 0 DTs and news trades that we have right now, by the way. Let me see. So if I just look at 69.10, 5 wide, 67.50, 5. I mean, you get $1 for a 5 wide. I mean, that's a pretty good trade. That's kind of right in line with what we like to see. 5 wide, 69.10, 69.15 calls, and 67.50, 45 puts. You get $1 there. Let's see. I also could just stack up some put spreads too. If I went put spread there, 60 cents. Let's try a little bit higher strikes. 70 cents. Basically thinking like, will the market stay supported here? We're in negative gamma. Our previous lows at 67.75. We'd have to be kind of an outsized move to the downside if that's the case. Let's see. Could I get a butterfly spread here? If I did a 10 delta, this I don't know. I'm just thinking out loud here. So if I did a 50, 40, 25, let me try this trade for $1 credit. And then 45, 35, 20. Try this trade for $1. I'd be risking 4 to make 1, but I also have $1,000 profit trap if we have like an outsized move in a single digit delta to the downside. I mean, everyone's worried right now that we're about to have a war with Iran. I don't think that's going to happen. I think Trump and company are probably going to look at some type of peace deal, some type of de-escalation in the market. Yeah, I was going to say the market's probably going to react positively to having some type of de-escalation. Trust me, that's probably the plan more so than trying to escalate this even further. We don't want to see an oil price shock. We don't want to see inflation rear its head. It's like all these things are like, okay, build up the tension, calm it down with some type of trade deal, calm it down to some type of peace talks, calm it down to some type of de-escalation. That wouldn't surprise me. Okay. So I'm just going to put a couple of broken wing butterflies in for right now. They haven't been filled. I mean, I'm seeing a kind of a max move around like 69.05 today, just based on real-time gamma. So if you are doing a standard daily profit play, I mean, as long as your call side's above 6,900, looks pretty decent. And then as long as your put side, I'd say to be safe, 67.75 or lower. So 69, let's say 69.05 or greater for call sides, and then 67.75 or less for put sides. Now, if you can get a decent premium for that, that should be a pretty good trade for an OPEX Friday. It's safe enough to stay out of the way. The market would have to do something very out of the ordinary. We'd have to have a bit of an outsized move. Like this one might be threatened a little bit if we have upside risk, but it should be contained if the VIX is falling lower. Okay, Vladi's in for $1.05. Okay, Supreme Court may rule on tariffs today or early next week. Yeah, all that stuff is noise, right? Yep. So for right now, I'm just putting in a couple of broken wing butterfly put spreads for now. I'm just going to sit on that for right now. I do have some trades I want to take a quick pop at. So Dash, this one's up $20. I'm just going to take the profit on Dash. This one is a calendar spread. Just going to take the profit. So $1.40 should be closing out for like $1.60. Maybe we can get a better fill on this. Can I get $1.65 credit? Maybe $1.70 if it's it'd be a good fill if we can get it. $1.70 no. $1.65. Not a big winner here, but just trying to close out for a break even or better. And DoorDash was not like a small mover either. We had a lot of crap happening on DoorDash, a lot of volatility with earnings this week. $1.50 is not filling, $1.49. Come on. Just looking for a small win. At least be liquid enough to close it, would you? Great. Let me check the price really quickly on DoorDash. And this should be a good looking sign, I thought. $160. All All right, what's this thing trading at right now? Down, it's down slightly. Well, Carvana is up 75 bucks. Walmart's up 100 bucks. All right, I'm going to take so I'm going to get out of DoorDash for a small loser, take Carvana and take Walmart, take the net gains on the day. So let me see if I can just get out of this one for a small loser. 130, lose 10 bucks. All right, I just got filled on Dash for 130. If you're in Dash with me, I'm just going to type these in the chat very, very quickly. Let's see. Dash is a credit of 130, so I'm losing $10. It's 10 cents. Carvana is up 75 bucks. So that was a bear put spread that expires today. This could be a full profit of 120 bucks. It's volatile enough that I don't want to see price, if price goes $2 to $3 higher, I'm going to take on some risk. I'm just going to take the profit here. So this should be worth like $1.95 or $2. Let's see if we can get $2 in this one. $2 credit on Carvana. So let me go. Deanna, this is coming in really quickly for newsbreakers. Dash. Entry $1.40. Closed $1.30 for a small loss. Carvana. Entry was $1.20. And that closed for $2 debit or $2 credit. So nice win. Walmart entry was 91 cents. We're up almost 100% on that one. See if I can close it out. So 91 cents. Try to grab 100% winner out of this one. Let's go $1.85. $1.80. $1.82. That's literally 100%. Nice. Okay. So Dash, Carvana, Walmart taking a small, a net win on the day. That's actually working out just fine. So edit message will be loss of 10 cents, win of 80 cents, and win of 91 cents. So net, about 160 bucks a contract, not too bad. Taking those off the table. Pinch, DLB, these are all pinch trades that we have. There's plenty of time in these. March, Spies a pinch, VIX synthetic long, that's April pinch. Okay, those are some new trades from this week. Good. Okay, so taking off DoorDash, taking off Carvana, taking off Walmart for nice net profit. Now we'll come back to SPX. I mean, if the low is in for the day, just kind of using this structure from yesterday, I mean, is this market trying to give us a nice little fib support off of this low? Is this a, bullish pattern where we're starting to break? See the pattern I'm getting at here? If this is a swing, so low to high swing, higher low to maybe a pushing up to a higher high. Phil, we did pinch point yesterday for 90 minutes. All right, looks like the market's moving a little bit up. I'm look again. I'm just gonna kind of hang out, not force any trades today. See if any gamble levels start to light up a little bit. So my 50% ATR is up here. That's around 6,900 or so. Just not gonna force a trade. That's all. Okay, what do we have here? Allen's in for $1.10. Roy's in for $1.25. David's in for $1.15. Good. These are all five wides? Five wides. Those are good fills, man. David, you're in 10 wide. You got some good strikes there, though. Those are pretty high calls and puts. High calls, low puts. Those are good strikes. Good stuff. Okay. Very nice. Let's see. I'm just gonna take a quick peek here. I might go 15 wide and just go way, way, way out of the way. Let's go to the weekly expiration. I mean, the 7,000 strikes, you get like nothing for them, so that's way too high. But could I go I mean, it'd be a hard time to get to like 30, 40, or 50 today. Should be very difficult to get there. If we did a 50 today, I mean, could we have a 1.29% rally? I don't think so. I'm going to try a 50. I'm going to go 50 by 65. That's a super, super low delta. And I'll match that. Thinking here. I'm going to put this in for $1. Let me see if I can get $1 here. I'll go $1.50 credit. 15 wide, I'll get $1.50. 69.50 by 69.65 and 67.15 by 6700. I'm still going to keep these layered broken wing butterflies in just because those each offer $1,000 profit trap. So I will see, but I'll try to get $1.50. We have to have a pretty aggressive directional move, one way or the other. This is way out of the money. These are really, really low deltas. So I'm going to put this in as a pending order. You know, I'm playing a little bit safe today. I've had a good week. So I'm not looking to get chopped up or beat up by some crazy directional OPEX move today. So daily profit play coming in hot. All right, new trade. So if you're in with some strikes already with daily profit play, good. Let's keep an eye on those. So all trades for today. So DPP is 220 expiration. I'm doing the 69.50 and the 69.65 and the 67.15 and the 6,700 $1.50 credit pending. Broken wing, put fly trades. All right, it's coming in Telegram here in just a few minutes. So 220. So I'm buying the 67.50, selling the 67.40, buying the 67.25. $1 credit pending. Buying the 67.45, selling the 67.35, and the 67.20. Okay. So I got 3 trades pending for right now. 69.10, 67.50, 10 wide for $1.90, Larry. Okay, good stuff. Dave says put in defensives. Nice. Good. Okay, Dash closed out for $1.30. I'm just updating this right now on the tracker. So $1.30. Walmart closed for $1.82. Carvana closed for $1.90. No, $2 even. So we have 10 cents divided by 7% loser on DoorDash. Totally fine with that. 100% winner on Walmart. And we did 80 cents. 67% winner on Carvana. Taking those profits. Okay, trackers updated for newsbreakers. All right, some pending orders. So pretty wide on the daily profit light iron condor, going 15 wide, way out of the money, 3 delta. Just in case the market gets a crazy idea. Put side wise, going again pretty far out of the money. We opened up today around 68.43. I'm going 100 points lower to start that. So if we have any threat, any directional threat to the downside, and these get filled, there's still a pretty good chance that these will hold and be profitable. So I'm basically stacking positions where my pin price would be 40 and 35. I'm just going to put a line down here, kind of box that in. So 40 and 35, 40 and 35. That's where I want to see price hold, even though my break even on that trade would be a little bit lower because I get a 10 wide profit trap. So this could some how I'm mapping out the day. So I have BWB for broken wing butterfly, pin strikes. These trades aren't filled. These trades aren't filled. And then the 67.15, in case this thing gets really nasty, which it shouldn't, but again, look, if the market is going to give us, like, the VIX is 20, and if we have another like chop suey Friday, here's what I would say. If you are in daily profit play, this is probably not the day. Same thing with yesterday. It's not the type of day when we have a 20 VIX. It's not the type of day to hold this thing all day. Okay. There's way too much potential volatility and gamma risk late in the day. If you have a 20 VIX, I mean, if the VIX is dropping like to 18, 17, 16, that still offers that upside risk that we've seen in the past. But a 20.62 VIX, I mean, the market could move up to 1.3% today, 1.29%. So if we take the open price and go down 1.3%, we could see the market getting to like 67.50 today, right? On the upside, we take yesterday's close and go up 1.3. We could have the market go to 69.50 today. So it's like it's possible, but that's using the VIX. So a bit of a retreat. There's 21. There's a 21.2. Let's see if the VIX is going to go up or down. Set a couple of alerts here. EWY. South Korea. Yeah, man. South Korea has been one of the hottest country ETFs. I mean, I think one of the big pluses in South Korea is they are incentivizing people to repatriate like crazy. If you pull out every dollar from the U.S. markets and put it back into South Korea, they are charging 0% capital gains taxes. So there's probably plenty of wealth that's coming right back into South Korea. Is this, super liquid? We trade options on this. I mean, the thing's already up year to date, 37%. I mean, I have no idea what to do with that. That is so far of just a blast off type move. I mean, great for South Korea, but this is why I'm trading like the non-US exposure, like EWY. Even though I'm not in this exclusively, I have this through SCHY. I have this through the MIXI XUS, right? I have this through some of those other ETFs that are like baskets. So I'm getting a little bit of this, but obviously not all of it. But it's a scary trade for me to be like heavily concentrated in non-US. I know that non-US is killing it right now. We have, this is some interesting stuff here. Consumer staples are up double digits. This is Altria, Pepsi, Philip Morris, which, Altria, Philip Morris used to be one big company. Coca-Cola, Procter & Gamble, Costco, Walmart. These are all up over 10% for the year. Okay. Everyone is jumping into safe, defensive stocks. This is the crazy part. This is just in the S&P, by the way. And I also have a screenshot of this is one of the worst starts the U.S. has had since 1995. The U.S. is being outperformed by the world by one of the biggest dispersions since 1995. This is what I think is a crazy market. We have the S&P as literally flat for the year. There are 94 stocks in the index that are down just plus or minus 5%, but there are 117. We have almost 30%. Almost 30% of the S&P is up over 20% or down over 20%. That type of like whipsaw dispersion is very, very challenging. Right? And so it's just like, think about the S&P like this big seesaw. It's like you have these crazy swings of plus or minus 20%. And the index is like, yeah, it's a lot of winners and a lot of losers. So the net, I mean, the net gain is nothing. And I just think the market is trying to figure out, like, is this dispersion going to still offer a supported market to go higher and drift higher, or do we need, you know, a bigger correction first? I'm not sure. Not sure yet. So anyway, did a call spread there, 52 now 70. Nice, good stuff. Cool. All right. Well, do I just sit on my hands now because daily profit is not doing anything? No. I mean, I'll keep an eye on things. What I can do is let's talk about this anatomy of the trade stuff. You know, do I think that I got lucky yesterday? I mean, not really. Like yesterday was after we kind of stalled here, and I'm like, all right, we have a pretty major expiration on Friday. If there's going to be many, you know, any direction, maybe it's going to come on Friday with a you know, OPEX type move. So I'm going to look at the same thing. So I'll build out a couple of trades here where it's like, all right, let's look at the reward to risk. Let's look up here for reward to risk. Let's look up down here for reward to risk. You know, if I can land like a 2-to-1, or better yet, a 3-to-1. You know, 3-to-1, and I take small risk, and manageable. Like 3-to-1 on the center is great because you can probably get a 5-to-1 here and a 5-to-1 here, which means if I win the center, I still make money like over all three trades. If I win one of the tops or bottoms, I make, you know, plenty of money on all three trades. So let me find some sections. You know, right now we're kind of stuck around this like 68.55 zone. Okay, so I'd say on the, I don't know, the way I kind of build this out is like if we're around 40, 68.40 to maybe this level around 68.80, you know, see if I can price in a trade that gets me kind of in this trap zone. Okay, and then above here, maybe overlapping where I can do like a 70. I've got to like kind of map this out ahead of time. So maybe a 70 to 69. If I went, I'm trying to think here, if I did like $70 to $50, maybe that's a big one, but something up here. So like $70 to $50. And then if I did $50 to $75. All right. I'm going to play around with this for a second. So if I'm going for the middle, if we're going to stay above 68.40, I can sell that call. Okay. So above 40 to 68.80. And then if I want to trap this thing, that's 40 wide, right? So I can go 70 to 30. So like this type of trade is decent, right? This is about a 2-to-1. So I'm risking 255 to make 750 or so. This isn't a bad trade. Now this is in a range. My max risk is about $270. Okay. Like that's not a bad trade if price is going to stay very, very calm for the day. Now, if I do this trade, I'd like to have some overlaps where I have maybe another chunk that overlaps it in here and another chunk that overlaps it in here. Okay. Because if I leave any gaps here, I mean, the market could get to that expected move or this expected move. I need to make sure I've got, if I'm going to do this, I'm going to map it out to have all three of these trades. So let me write this down to see how it plays out. If it makes sense, maybe I'll throw this in and let it kind of sit for the day with some small risk. So we're trading around 60 right now, 40 to 70, not a ton of risk there. So I can go 68.40 or 68.80. And then 68.70 by 68.30. We'll call that kind of the mid. And it's trading for about 37. I want at least $37 credit. 37 credit or higher. Okay. Then if I thought, all right, well, what if we get up to like 6,900 today? If we get into 69, I can put a trap in here. I can do, so my high strike would be 80. So if I did 75 by 15, then an 05 by 65, that one's not offering enough profit. Is that the right? That's 40. And that's 40. That's just over a 2-to-1. So here's what I can't do. I can't do a 2-to-1 reward to risk and put on 3 trades. That doesn't do me any good. Like I want, if I'm going the higher side or the lower side, I need to make sure these mathematically make sense. I need like a 3-to-1 or better. Like yesterday, I took the trade. It was like max risk of 2 to make like $900, or max risk of 50 to make $900. Like those, obviously, if I win those trades, those pay really well. Maybe I can tighten this one up a little bit. So that is 85 to 05. So take this down to 65. That's 40. That's 40. Way more risk. I'm just going to let it hang out. Okay, now the 7,000 gamma goes away. Now real-time gamma is maybe moving up towards a 50% ATR. We're getting a bigger strike around 6,900. Okay, so 6,900 seems like a call fly or put fly. I mean, it's going to be about the same price if I did a call fly. So if I go 15 wide, so it costs me, maybe $2 to make 15. That seems gettable. I mean, if I was going to put risk on the table today, it's like, okay, if we get up towards 6,900, this should pay. So just again, real-time gamma, right? We're getting it. Oh, fudge, there we go. We're getting some positive gamma. Look at this. Look at this thing. Look at this thing. What's our 10 o'clock news, by the way? Holy crap. Holy crap. Sit tight, everybody. Oh my. What the F is happening here? All right, so I just got filled in the Iron Condor for 69.50. What on earth? That's a lot of movement there. Oh, the Supreme Court crap. Dude, don't give us another blowout move to the upside, you F. Oh my God. Yep. All right, let's take a quick look. This is not something you want to step in front of. So if we can get, let's go SPX here. If that can quickly offer me some profit, I think we need to close it like pretty quickly. Just seems like some wild and crazy movement. I don't want to get blown out to the upside here. Mother effer. All right, this is like wickedly inefficient, so I'm just going to sit tight for a second. Supreme Court decides today to drop some news on the markets. All right, we'll see let's see what market makers do, because that blue line should matter. If this is a big pop and a big fade, if we get some profit on this thing, like I'm going to take some profit real quick. No, is there something Supreme Court stuff? I don't know. Let's look at financial juice. I'm surprised not just like breaking news somewhere. All right, if this move fades, I mean that's a big intraday movement. If this thing offers some quick profit, I'm in for $1.50. Let me close if I can get. Should try to take half of it really quickly. We'll keep an eye on this. Looks like all my news outlets are broken. I'm going to financial juice in my Discord. Where's my news feed? Let's see here. Limited strike on Iran. That was 939, 955. Fed talk. Bostic speaking. Labor's tight. Iran preparing deal proposal for U.S. Trump's global tariff struck down by U.S. Oh boy. Interesting. Okay, well, let's grab a few bucks out of daily profit play. If anybody's in these trades right now, this is not the type of noise you want to have to deal with on a 0 DT. So if you got some profit, I'd say we just quickly take some profit and get out of this trade. I'm going to try to grab a quick buck. So was that okay? Legality of Trump's global tariffs. All right. Well, we're gonna have some noise, that's for sure. Iran preparing deal proposal for U.S. I'm telling you, the Iran U.S. thing is probably going to be a de-escalation. I wouldn't put a lot of thought on like, oh, we're going to war. I don't think we are. I think that's the last thing Trump wants on his plate right now is another conflict. We've already had the hot spots with Israel, Palestine. We're having Iran, Israel, U.S. We've got Russia, Ukraine. Like, you know, simmer down. Okay, I'm trying to get out here, so I'm for $1.50. I'm trying to put a pending order in for $1 to take a quick win. It's up $30 right now. I'm just going to try to grab a quick 50 bucks if I can. This might settle down very quickly to give us like a big fat winner. All right, I just got filled for $1. My daily profit is out. So that was quick. DPP update. Entry $1.50 credit. Closed $1 debit. Taking the quick 50-cent winner. SCOTUS tariff news and whipsaw today. Aggressively managing profit. Okay, so that's my quick update right there. Now this again might be a bunch of noise and the markets do next to nothing, but this is also why we measure this stuff in the mornings, right? Interesting how the market responded almost to the exact point that we had our plus minus move on the day. And now it's right back to neutral. Now, what I don't know is this about to get worse, right? Will this news for the U.S. be like a big blow to U.S. momentum, and this is good for the world? That I don't know. Like I was thinking about that when we had these balks of the Supreme Court over the last couple of months. Is if they shoot down tariffs, the U.S. is going to have to come up with a way to, mitigate some of the deficits. But we understand that we're running hotter deficits right now, right? Our trade deficit went from 53 billion to 70 billion. It's getting worse. So this trade more is becoming, a bigger hole that we're digging, more fiscal spending. So it's like it's on paper. It sounds like it's rough and tough on the world, but it's really not. I mean, I think consumers probably bared most of this expense. So we'll see. I'm just saying worse for the U.S. I mean, now the U.S. is going to have to come up with something to justify. Hey, look, we want to do tariffs, so okay, we can't do tariffs the same way. We have to do something else, like use Congress because we're passing them like it's a tax. So today is it's noisy, right? Does this change the underlines? I mean, if anything, this is probably good for U.S. companies that that did a lot of front running for tariffs last year. So, I mean, if anything, just like get this out of the way. We've had this is like the fourth time it's been thrown out there like, oh, the Supreme Court might talk about it. I mean, I knew it might be a conversation, but we've had 3 fake outs, so it hasn't even been on my radar. Pops in today, and it just becomes very noisy. So price is pretty much right back to center. I would say take the win. I mean, if you got some profits, take the win. Because again, we're seeing some very quick direction. No, I'll keep the butterflies. Those are still like quite a bit out of the way. Here's my mapping for the day. So this is the expected move from our market maker, right? Our plus minus on the day. This is where I'm positioning my butterflies. So I'm still like based on an efficiency day, I'm still way below what the market maker would be allowing today. I mean, clearly they're playing it pretty tight to the upside. But like I said, we've had a couple of instances. You go to that, I don't even know what the day was. It was just a Friday where the market ran up and it behaved like it was a 27 VIX. So I don't want to call the top today. This market could actually use this as good news, and this could be just this catalyst. It's like, hey, tariffs won't hurt as badly. Off we go. Right? Is this what the market needs to get back to 7,000? Cool. I mean, maybe. Obviously, I'm not going to complain if the market wants to go up. That makes life a lot easier. So I'm just going to let this kind of chill for the day. If I'm in and out with one small daily profit play, then so be it. David says sold calls for profit, holding puts right now. Okay, good. All right. So just taking the temperature. How's everyone doing? We have some daily profit plays. We got some different strike levels. What are we looking at? I mean, I saw some 69.10, 69.15s. Hopefully that's doing okay since we had a quick 20, 30 point drop. If you were able to get out of the call side of those trades, and I typically manage daily profit play like everything. I don't like to close out just the put side, or I'm sorry, just the call side. But if you're holding it today and you had some profit, I'd say just it's so noisy and so aggressive. Like just take the quick win. I don't know what this means for the rest of the day, but testing this level, a lot of times this market like fake out, and then if there's some momentum behind this, like this might be all the permission that the market needs to go higher. Okay, so let's go. Let's use the VIX box here for a moment. We closed around 68.62. Let's kind of get a gauge on the VIX here. 68.62. Right? So kind of the VIX box extreme would be around 69.50, which is what we had initially talked about. Could we get something here at like the 30, like 68.30? Let me check. Maybe the bottom is in for the day. 68.30. Not bad. So I could, I mean, if we're not going to take out the low today around 68.30, today's low is 35. I mean, I can get almost $1 for this. Supreme Court does not address eligibility for tariff refunds. Hundreds of tariff refund lawsuits pending the U.S. Trade Court. So 30 cents. So risking 9 to make 1 with a $500 profit trap, but we'd have to come back and break the lows. Yeah, I'm just not going to I'm not going to overthink it. I'm happy with these positions. Grab a quick win out of daily profit play. I'm happy with these positions. I'll just kind of assess and get a pulse for the market. Okay. Randy, you've got a 69.25, 6,800. Okay. How's that looking right now? It's got to be looking okay with it. With this market retreating a little bit, you got to be looking okay on that call side then, yeah? Sucks. Does it? For a $1 5 wide, is it bad? I mean, 69.25, that's high enough. All right. Well, if it retreats back to like 68.60, it should be looking okay. The one thing on a 5 wide, we know this. The one thing on a 5 wide is the 5 wide is so sensitive because the strikes are closer that you just need price to calm down. Down 35. All right. Just hang in there, man. I think you're going to be all right. Did you put that trade on before? Did you have that trade on before the Supreme Court pop here? So Supreme Court rules against Trump tariffs. Okay, fine. Do we have some other stuff sprinkled in? But mainly that was the big pop on Supreme Court. That was a huge move, by the way. I mean, 64. I mean, we popped 50 points in 5 minutes. It's all right. I'm telling you, Larry, hang in there, man. Hang in there. Got Phil as a pop started. Okay. All right. Look, just hang in there, right? I'm telling you, like, think about this. This was a surprise type movement. We've seen it before. Surprise type movements tend to not be like they're not taken lightly by the markets. I mean, look, you can't throw an announcement like out there and have market makers be on their toes and like, oh crap, we're totally screwed. They're smart and they're clearly defending. And look at this price action. I wanted to be a seller. I mean, this is just structurally speaking. I wanted to be a seller if the market came back into this level. Well, it was pretty close. It did the same thing. It tested the exact same high that we saw from, was that Monday? Tuesday? Wednesday. It's all blur. The exact same high that we saw on Wednesday, it tested the exact same high. So again, how are your trades looking now? We're retreating a little bit off that news. That's good. We're kind of getting right back to neutral. 5 wide is going to be a bit more sensitive. It's going to be a bit tighter price action. 10 wide should be okay. 15 wide, I'd say I got pretty lucky because I treated that kind of like a synthetic, right? 15, 20 wide, you'll get like that kind of immediate. I mean, let me see what my trade was now. $1 is trading for 55 cents. Like 15, 20 wide. Again, you're taking on a lot more risk, but because that separation between the calls and the puts, you're just getting that big change in bid price. Like the delta shifts so aggressively, the bid price shifts aggressively. So I mean that was a quick from $1.50 to 55 cents in. I mean, it's been 10 minutes. Like that's a lucky trade. But I'm happy I took the $1 out of it. It's fine. If you're still holding that trade that I took, grab the $1 and be happy. I would be out of this trade for 95 or $1. Okay. So right now it just seems like a bunch of noise. Hopefully anyone that's sitting in daily profit with that little pop in volatility is right back to center, right back to neutral. Should be looking better as things calm down. But like I said, this is probably not the day that you want to be brave enough to hold this thing all day. If this market wants to go retest these highs again, if this market wants to go back and take out lows, we could just have a lot more direction come in than we think. I just don't want to be on the wrong side of that stuff. Okay. All right. What's the VIX doing, by the way? Okay. I mean, is the VIX going to go up again? If the VIX breaks 21, should we be mindful of that? There's a 22.95 VIX just in case. So 1.4%. If I go here, I mean, my broken wings are 1.4, 1.5. It's like, I'm not really worried about these trades. The VIX could spike up to fresh highs at 23, and I'm still okay if they get filled. Okay. How are your daily profit plays doing now? You're right back to center. This entire move just got neutralized. I mean, if you have think about the mechanics we've run in the past, 25%, 30%, great profit target. And that's just to make it a quick survival day. Don't do anything silly. Take the money, move out. Right? Yeah, Pete says back in the money, good. So we're right back to square. Randy, you should be looking better on your trade. I know 5 wide is a little sensitive with the deltas, but 69.25 looks a lot better. Looks a lot better. I mean, now you're 50 points away. So just keep me posted. Let me know how you're doing. I'm going to keep those broken wings pending. So Telegram update, closed out the quick winner right here. And then the other 2, these are still pending orders. Pending orders. If those get filled, my break even on this one is 67.30. That should be 67.29. My break even on this one would be 67.24. We'd allow the market to fall 1.4, 1.5%. Not saying that it will, but I mean, I feel pretty confident that there's a trap opportunity there that the market would, I don't know, it may go nowhere. It might stay inside these blue lines. And we can sit here in hindsight and say, yep, we measured out our move. We have our expected market maker efficiency and expected move. And what did price do? Stayed right inside it. Like, that wouldn't surprise me. Like, we plan on that to happen way more than it doesn't. Okay. So anyway, just head on a swivel. That's all. Okay. Keep paying attention to stuff. There you go. Davis says going skiing. All right. Ernesto's break even. Randy says getting better. Okay, good. Good. All right, let's see if things just settle down here for the morning. Because now with things kind of settled down with a couple of spikes, now you just need some time. If the market is just going to sit here and chop a little bit and chop around, that's good. Okay, what we don't want to see is this. I don't want to see this just breach and go, right? Where the market's like, all the market needs is an excuse for something, and it's just going to be one of those silly upside days. Like, I am telling you, those are so crazy that the market would actually like blow us out to the upside if we're calculating a VIX, if we're calculating an expected move, and we're getting a 2 to 3 standard deviation move. Like that is some wonky price action. So I hope it doesn't happen. Just let price settle down. If you're in daily profit plays right now, just let price do what it needs to do. If it's calm and even if it's choppy, just let it calmly play out. If we're hanging out around 68, 80 or so, we're going to be fine. Okay. Remember, this is what the daily plan was. This is what the market makers should be focusing on. Keeping price below this, keeping price above this, and maybe it's just a noisy posture. And then next week, the market's like, all right, well, do we use that as a breakout? Do we use that as a breakout? Maybe. Maybe the rest of the day, it's going to be this big, it's just going to be like a candle. One big news event that maybe has some price action higher, price action lower, to be determined. Okay, we'll see what happens. All right, I'm going to move this chart alarm. Let's move this to like 55. Give me a heads up if I'm getting filled on some of those broken wings. It's going to take some direction to get there, but this also might not fill. I'll set a chart alarm. Let's see if we break these highs at like 69.20 or so. So that way, if I do step away, that I at least know, okay, price is either breaking higher, prices come back in the lows. This is above the market maker expected move. This is below it. If neither of those activate today, then price just stays inside. Everyone that's trading daily profit plays should be looking at some profits today. Okay. All right. What else we got going on here? Any other earnings stuff? What I could do, I'll jump back into pinch point. Let me see if I can find these are my NASDAQ stocks here. Wouldn't mind looking at a couple more trades for pinch point. Let me open it up right here. Oops. Okay, so here is my pinch point scanner. IWM has officially went into the go zone. I've got a trade in the SPY. I'm going to take a look at the Russell. I'd like to think the Russell is heading higher. I'd like to think it's heading higher. Let's take a look. So a couple things. Here's what I'm going to do on Russell. Either we break and go higher or we get a pullback towards the 200-day moving average. This thing is pretty pinched. Let's see here. Do we get a breakout? So last time, bro. Let's see. Swing trade, Russell higher. Couple things. So I can just look at I'm certainly more bullish on Russell. I mean, I've got some projected moves, maybe going out like to March or April, but I would look at a couple of trades. Either one is we're higher from here, or we have a pullback and we're higher from here. Let's see what happens. So let me see. And I mean, for a swing trade, I'm going to try to get like maybe 240 by 245 on Russell. Let's take a look at some expirations here. So let's go IWM. Let's get out past kind of the weakness noise, maybe out to May. Right now, if I did a 265, 266, let me try this. So out to May, Highs at 270 already. I mean, the trade I like is like the 240 by 245. That's the trade I like. Let's try a 240. If we trade this around, let's try like this 60 by 70. I'm just trying to get a gauge for price here. So if I buy the 60, sell the 70, it's a little higher premium that I want. If we get this like literally at the bottom end, that's silly. It's more expensive just to do a debit spread on Russell. Fudge muffin. Closer. How far out of the money do I have to get? So I've got to be a couple dollars out of the money to get the 1-to-1 that I want. All right, I'm going to try a 243 by 248 for, that's a 5 wide. I'm going to try to get this filled for 250 debit. So risking 250 to make 250. We got to pull back to get it. May, not bad. I'm going to stagger these out May to June. I'm going to go May 250 debit. Let's go after May. We've got June 18th. I can go June 30th. Similar strikes. 240. I'll go a little bit longer. This one I like. I'm going to try to get this one for, say, 450. So trying to get some asymmetry. So 450 to make 10. All right. So for pinch point, I'm going to add these in. These are pending orders. So I'm not going to trade in the noise here, although I do think the market is likely just going to keep going higher. I mean, if we look at the pinch point, IWM is a break out to the upside. It's just looking for, buying an out of the money call or doing a debit spread. So my debit spread, buy the 263, sell the 295. You're paying $9 to make $32. I mean, that's a great return on risk. That's out to March 27th. I'd like to go a little bit further than that, by the way. I think that's a bit pricey, but still pretty good. I'm looking to see. I mean, we've had dips here, right? This is why I'm trying to take the technical trade. We had a dip, great time to buy. Had a dip, great time to buy. We're still hanging out. The 50 EMA is adding some really nice support. So I'm looking to see if for some reason this market either breaks and goes higher. I'm not going to get the trade that I want, and that's okay. But if we dip in any way, I'm trying to get filled on a dip and then reflexively come back up to fresh highs. And I want to stack up a couple of trades in here. As this, if this were to happen as well, I'm definitely selling some premium down here. I already have some ratio spreads running, some naked puts running for my Project Options Edge. So I'm going to use that kind of dip opportunity around the 240 handle if I can get it. So for pinch point, I'm going to add this one in as a pending order. So 112 IWM. So I'm looking for the May expiration. I think it was May 15th. May 15th, 243. So buying the 243 call, sell the 248 call, and try to get that filled for a 250 debit. Yep. Pending. Then I'm going out to June. Buy the 240. Sell the 250. Good deal canceled. All right. Couple working orders there. Put that in Telegram for pinch point. And what else we have? I want to do a filtering on the NASDAQ. We priced out a lot of these yesterday. So a lot of these look familiar. We had 16 or 17 this week, so there's been a couple more new ones on here. I can look and see what's not priced in. I don't remember doing hog. I feel like we didn't price it in yesterday. What is HOG? Harley Davidson sitting at 20 bucks. Are people not buying toys anymore? Do I need to go buy a Harley to I need to go buy a Harley, see if I can pop the stock price up with my $20,000 motorcycle. I'll put it in pinch point Telegram. Just give me a second. New trade, IWM, 5/15 expiration. And 6/30 expiration. Buying the 240 call, selling the 250 call, 450 debit. If filled, I will update and add a 50% take profit target. Okay. So it's in Telegram, it's in your tracker. Yeah. Well, I've got an Indian here. Let's look at some fundamentals for Harley. I do like Indian. Indian's one of the first American motorcycles. Gotta love that. I'm happy with mine. Okay. 7 times earnings. I mean, that doesn't look great. If it was down here to 15 bucks, I'd just take a bull call spread. I mean, we can ask for it. Let's say we get down to like $15, $10 to $15. I wouldn't mind taking that trade. I mean, this is great financial crisis at $8. This is COVID crash, $15. I mean, seems somewhat attractive. Oh, I know. I mean, everything's expensive now. Everything's expensive. I mean, my bike's a 2021. I've never. I mean, there's a couple bikes I was tempted to, but it's like you don't finance toys. You know, a motorcycle's a toy, a jet ski's a toy, a dirt bike's a toy. Like, what's funny is having these conversations when I was going in for service and I got this kind of altitude tuning for my bike. They're like, oh, it's better in the mountains and better, horsepower and MPG or whatever. So it was like a $500 tune on my bike. And the guy's like, you know what? I had an Indian Challenger and I really liked it, but then I got this adventure bike. I'm like, okay, tell me about it. I mean, the adventure bikes are very popular out here. It's $30,000 for a dirt bike. And again, that's not knocking anybody that has one, but it's like, I cannot believe that essentially a dirt bike with bags is $30,000. It's crazy. Like, I've got a big, fully dressed bike that I can ride when it's 30 degrees outside. I don't even feel anything. Like, that's a comfortable ride. It's heated seats, heated handlebars. It's a comfortable ride. An adventure bike, it's like, I can't have a windshield high enough to cover me and there's nothing on your legs. And I don't know. Anyway, I'm like, it's a dirt bike for $30,000. And the side-by-sides, the little off-road side-by-sides that people are driving nowadays, like those are like $30,000, $40,000. It's a car. Stupid, man. Yep. So Honda UTV that I paid. Yeah. Right. Yeah. I mean, I know some of the top end stuff, like, I mean, a brand new, like the Indian Chieftain or the Indian, the Challenger, like I have, those are like MSRP brand new 2025, 2026. It's like $35,000 bikes, $40,000 bikes. Harley, like Road Kings or Street Glides, like $40,000 bikes. It's crazy. So yeah, I mean, this is my 7th motorcycle, I think. 7th motorcycle, and this is the most I've paid for one. But I also wheeled and dealed, and I sold 2 bikes in the process. Like, literally, I sold 2 bikes in like 3 months and made a couple bucks on each one. So it helped me kind of pay it down and justify, like, all right, this is really the bike I want. It's, fully dressed, get a couple things added to it. I mean, it's super comfortable. And I mean, we have snow here. It's like 30 degrees something. It's going to be in the 50s next week. I ride it every week. Like, I mean, again, it's call it, your little outlet, but it's like all I need for kind of my mental reset is let me get my motorcycle, drive it up to the gym, go work out for a couple hours, come home. Like that's my reset. I just like being on the road for it's like a 15, 20-minute ride back and forth, get a good workout in, and I'm like back to normal. All the stressors kind of go away. So anyway, good. It's crazy, right? It's just like, but I said, don't finance your toys. So it's bad enough that cars are expensive. It's bad enough that mortgages are ridiculous. But yeah, I mean, don't finance your toys. If I was paying for a motorcycle on a monthly payment plan, I'd be so frustrated. So buy a used bike. You'll meet some great people. I mean, people take care of their bikes. They take care of their toys typically. You meet some good people. They're low maintenance. Insurance is pretty cheap on them. But as I'm trying to think, as Sean will say, Sean will pop in and say, because I'm a dad, he's like, get off the motorcycle. That's why I only ride it like 15 minutes. Just a little pop up, safe little road up and down we're not in downtown. We're 20 minutes north of Salt Lake City. There's no crazy traffic up here. So we're okay. All right, Deanna, I see your comment there. Cool. All right, we'll hang tight for another 30 minutes. We'll just hang out till the top of the hour. Yep. Yeah, I'll do my own. I'll do my own oil service and stuff. There's probably some more crap I'd like to do. I mean, it's not something I want to mess around with as far as like, oh, I can do everything on my own bike. I mean, I don't know. I know that if I do something not perfect, it's like on two wheels, it's a little bit riskier to not have like the spot on maintenance, but when I can change the oil, that's easy enough. Um, but I don't mind doing like a spring cleaning. Like I've been riding it all year on a trickle charger. Anyway, we can get off the topic here, but some of you are loving motorcycles. Some of you have them. Some of you have toys. I'm looking for like Carter's 13 months, and like I'm ready to get him like a little balance bike. There's a couple kids that are in the playground. This park that's built right behind us. They have these little electrical dirt bikes. They go like 50 miles an hour. A couple kids that just race around. You can hear like the little like whiz, they just whiz by. It's kind of quiet, but enough to get attention. But I saw them like riding around the basketball court, and they were like hitting these little like park ramps. And one of the bikes goes like 35 miles an hour. The other one goes like 50. Like when I was a kid, I had a go-kart. The go-kart went like maybe 25 miles an hour. Felt awesome, So little dirt bike going 50 is pretty sweet. Yeah, Mike, I see it. I had them. No, not. I mean, I'm not in a crotch rocket. I got the big one. I had those though. I had a GSX-R 1000. I had a Hayabusa. I've had some of those bikes. All right. Anyway, we can get off the topic. How's everyone's doing? How are we doing for daily profit play? We're still inside our expected move for the day. If the volatility calmed down here in about 15, 20 minutes after that little pop, that was at 10 o'clock on the nose. Um, I mean, price action just kind of chilled for the day. So I would say market makers were more than prepared for this. Doesn't mean they're going to let it contain for the day, but if you have your trades offering some profit, here is the one that I got filled on, got closed out for $1. It's trading for back to like 50, 55 cents. So, I mean, like I said, I'd be happy with that trade. Get filled for $1.50, out for 50 cents, and you're done with that trade in 20 to 30 minutes. I'd be happy with that. For the rest of the day, I'm just going to kind of wait and see. Obviously, if price goes up, that's good for engineered options. Price goes up, that's good. We got a full profit today on waterfall income, by the way. Waterfall income still looking fantastic for our trades. This one expires today for full profit. And then we have the staggered expirations, May, June, July. We built out some of these waterfall income trades. I'm just stacking these up. I did take a trade. I did it on SPX. I will show you here. SPX. I did an August trade. So I will share this in this session. I'm not going to make this an official waterfall income trade, but I will tell you what it is. So this is an August trade. I did a 6,200, 6175, 61, 60, 50. The reason I did this trade is, I've got plenty of accounts here with decent capital. This is a risk. This is a find risk way to still grab some decent premium. So I'm stacking up here for about $285. There's a $2,500 profit trap. It's also a 10 to 10.5% buffer. So again, like I'm doing the same type of trade. I'm just taking on a bit more risk as far as max risk would be about, let's see, it'd be, what's that trade? I think it was 30 wide minus the 25. I'm still risking like pretty small amount here. So this is 50 wide. Yep. So I'm risking like $2,000 on the trade. It's just under 1% for a lot of my accounts. So I've got 50 wide on the credit spread minus the profit trap minus 285. So I'm risking $2,200. That's like half of 1% on some of my accounts. I still think the trade is very safe. There's a big fat profit trap. We got a 10%, buffer and, profit trap at $2,500. So I'll stack up some of those. But like I've said, for this year's waterfall income strategy 2, I'm being very, very tight to my risk reward. I'm going after like 50 cents or $1 to risk 450 and still have a profit trap built in. I'm liking the 10% buffer quite a bit. Okay. Sharita, good stuff. That sounds nice. Nessa says, got in with a $1.25. Now it's at $1.55. Okay. So, I mean, is it coming back though? What's your top strike, Ernesto? What's your top strike on your calls? The only way you're going to show a loss right now is if your strikes are at like 69.10, 69.15. That's about maybe a little questionable. Let's look at the expected move for the remainder of the day. Right now, just based on where the VIX is at and current option chain. So market shows that we could still hit around 69.10, 15 based on the remaining time in the trade and the expected move. So if we settle down into like, 70, 75, or 65, it moves slightly further out of the money, increase your probability of profit on the call side. Yep, 15. Okay, so that's why it's just showing a little bit upside down. Is 15 on the expected move is still, potentially gettable. And again, it doesn't mean that it's going to, hit it and stay there. It just means like it could be tested or price could kind of move its way up to it. Yep. And then 5 wide, same thing. So you're in the same kind of boat as Randy, where like the 5 wide is a little bit more sensitive to price because they're so close together. So you need just a little bit more, time and expect the move to be out of the way. So this is, just a lesson to take away from this today too, is like, this is what an OPEX does. OPEX is the major monthly expirations. Typically the amount of money that's sitting in options to expire is in the trillions of dollars. So sometimes on these major monthly expirations, there can be some big movements heading right into it or the day of. And that's just something we have to be mindful of. Doesn't really change the plan necessarily, but we have to be mindful of it because there can be stuff like this where it's like, on a Friday, OPEX, market decide to do something. I mean, that's a very inefficient move on a 5-minute chart. We shouldn't see price do that. But again, the inefficiency was immediately thwarted, which is good because the market makers are paying attention. Like that's pretty much where they expected to see price go and stay today. And if they do their job, then they keep it below 69.15. Cool. Right. So we'll see what happens. And at the end of the day, look at the S&P. It is still nowhere. It is still nowhere. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, everybody, of indecision. 12 weeks. Yep. And like I said, when we had this conversation on Supreme Court, what they rule for the U.S., the globe is probably going to love it. Okay. So if you go ACWX, what's it doing today? It's up. It's up on the week. It's up on the day. If anybody wants that non-US trade, this is the world without the US, ACWX. Throw it in your watch list. Okay. So year to date, I mean, again, it's not a crazy run. It's not South Korea up 37% for the year, but it's up 8%. We're up 0. SCHY, this is non-US exposure. SCHY for the year, it's up 11%. You go to individual countries, India, year to date's down. Brazil off to a pretty good start. Brazil's up 20%. ILF, it's up 18%. Africa's up 8%. China would go FXI for some large cap tech. Well, down a little bit. Year to date, oh, this is down. KWeb, China internet stuff, that's down. Crazy. All right, I'm not in KWeb. I'm in FXI. Let's see what else. Alibaba, they getting a pop today? Kinda. Year to date, anything? 2%? No. Year to date, 1.57. Baidu. Year to date, down 6. I say that, but I mean it was up. I mean, I closed out a Baidu at like the 159 area, which is I'm pretty happy with that since we got out. I mean, those the top of 165. So now if you have my project options edge, we had a Baidu trade filled. By the way, I don't think I put that in the tracker. By the way, do you remember talking about that? It was a couple weeks ago doing a little project options edge on Baidu. Let me see if I have it in my tracker. It should be offered up. Let me see what it trades for now. I got filled for like 205. Baidu. Oh yeah. Okay, so it's in there. Trade number 80. Trade number 85 for project options edge. This is filled. So it's an 85 by 80 ratio spread, pulling in $2. So if Baidu were to come all the way back down to these multi-year lows, I would own some shares. Otherwise, I'm just going to make $200 and this thing just chops away. I still have a measure move on Baidu all the way up to 240. I know that seems crazy. It doesn't seem exciting. Everyone that is like worried about, this de-escalation, decoupling of US and China, I still think this is a good opportunity to be, long. That's my, technical projected move is like 240. But look, you have to remember, I owned this stock in this crap for multiple years. So when we went all the way back up to my profit target at 160, I got out of everything. So, I mean, I was banging the drum pretty hard on being long China. Nobody liked it. It wasn't popular. It wasn't a long-term anything. It's like I rent China, not own China. So I rented for, a couple of years and I think I got paid pretty well. There's some more upside technically, but I'm just going to take my time. Okay. Just going to take my time. All right. What else? Sure. Copy your trade view chart. Sure. Which chart? Anyone in particular? Or you want my ugly workspace with all my moving averages? I don't know what's going to be on here when I share this. Sometimes you have my text boxes, sometimes you don't. But I mean, all I have on this is nothing fancy. I just have a bunch of moving averages. So, my drawings, my boxes, that's just me using symmetry stuff and measuring moves. But it's what is this? A 21. I have an 8 EMA, and then a 50. So an 8, a 50, a 100, a 144, and a 200. Those are my big ones. This green line is a 10-period monthly. You can see that it kind of matches my daily 200. And then I have a 8-period yearly, or I'm sorry, 5-period yearly, which happens to be like a big institutional number for just like weekly and monthly charts. So, I mean, you can see that big blue line is called some massive, massive levels. And, obviously when price gets far, far, far away from it, that becomes the potential, this is like the drawdown stuff that I worry about. Like this drawdown during Liberation Day, the rotation into Liberation Day, it wasn't a surprise that it happened because we had such a long stretch away from it. So that's why I'm wondering what happens in 2026 and 2027. Look, if we have a decent, let's say it's a steady, maybe not be an impressive 2026, but the market just like finds its way up to like 7,000 plus, that's fine. What concerns me is getting into the end of the year or into 2027 that we're far enough away that we put in some pretty severe tops. So, you think that this was bad. You think that this was bad. You think that this was bad. Guess what? The system is more levered. The system is more complacent. It just means that bigger corrections are happening. Right? So I'll put it out there. Let's just say, again, hypothetically, we're sitting here sniffing 7,500 this year. If we get to 7,500, I would be concerned this market could drop, 25 to 30%. And that's still a bull market. That's what's crazy is we're like, oh, 20% bear market. No, it's not. It's actually the correction that needs to happen to be the reversion to the mean. So, this to me is the most important structure that you need to pay attention to in the big picture. I would buy, obviously within reason, like we're pretty much buying like all the major dips. This is the major support. If the market breaks this major support, we've got some serious problems. Like this could be the 2008 stuff all over again, where it takes years to get it back, right? 2001's crash took 7 years to get back to those highs, and we got right back to those highs, and then what? Another great financial crisis. Okay, 2008, 2009's bottom took until 2013 to get back to those highs. The market is smarter. The market is faster. The cycles are more aggressive, but I don't think the percentages are going to change. If we get a 20% pullback or 30% pullback, it's still seen as a buying opportunity in the big picture. But in the near term, could we have a 20, 30, 40, 50% correction, in the next 5 years? Probably. I do think that once we have, all of the AI productivity, all the AI booms, all the disruption is priced in for better, for worse. I think the market looks at this and says, man, we really can't grow from here. It's like remember, this is a forward thinking mechanism. If we can't grow through it, if we can't grow and have like just optimism moving forward, it's like the market is going to have a meaningful earnings compression. And that gets ugly fast. We haven't really had, this was a deleveraging. It wasn't really, obviously naturally the earnings come down a little bit. But that was an exogenous shock. This was a bit of an exogenous shock. This was a deleveraging. We have not had a deleveraging yet. Even though under the surface we are getting deleveraging in certain sectors, it's like, is the market that much smarter, more sophisticated than in the last 3 years? Possibly, right? Like it's cleansing some stuff under the surface while keeping the indexes pretty tight, which I think is impressive. But if we price in, more perfection, it's just going to be hard to think like we can't have a technical pullback. So again, there will be a time and a place where the market's going to roll over. I'm just not calling the top right now. I think that's crazy. I'm still actually buying a lot of dips here. If the market is going to pull back to here, even pull back to here, I'm buying dips. If the market runs grind higher, that's fine. But if this structure breaks, that rolls over. And again, it's defined risk. I'm not going to be like, Druckenmiller type leverage to the downside. I'm not going to be big short to the downside, but I will take some stabs at it. Okay. But we can still survive week to week with engineered options, waterfall income, day to day with daily profit play. We can still take good trades discretionarily. We can figure out how to make money. Okay. All right. How are we doing out there? Gamma changed quite a bit from this morning, didn't it? So let's see if the markets can keep prices here for the day. All right. The day's not done. It's only, it seems like a lot's happened in 2 hours, but it's only been 90 minutes of trading. Let's see. So, 7,000 highs. The market's obviously tested a couple of times. Could we get through this high and break above? Maybe. If there's going to be some rolled risk to next week, let's see what happens. If the market is out here coming into Monday, then I would probably be willing to jump right into a pretty aggressive daily profit play on Monday. If the market is inside of our levels, like we just approach it one day at a time, like we do every day. Okay. All right. Any questions for the day? We've got some new trades on Pinch Point. We have, so by the way, Pinch Point should be up inside. Let me see if it's in the classroom right now. Let me see here. Yeah, Mark, I would just put it for $1.50. Yeah, if you got in for $1, that's $1 debit. I put $1.50 credit. Just take the 50%er. That's what I'm doing. I'm just making those like auto. Just close me out for my 50% winner. Those are much easier to hit. Yep. So not trying to be greedy. Good. They're good prices. We got filled on pretty good levels. We get a 1-to-1 opportunity, but because I'm going both directions, just give me the win. Okay. So let me go into, let me see if Pinch Point added in the classroom. So let's go scanner, video walkthroughs, join classes. Let's see this. So here's Pinch Point. We did a masterclass yesterday and a trading session yesterday. So let's see if it's time-stamped from yesterday's class. There it is. And that is the sweatshirt that I wore yesterday. So yes, this class right here is yesterday's trading session. I think we have 6+ trades that are still good trades. So they're not running away. You can take the trades. Expirations are out anywhere like April, May, June. So there's some decent swing trades. A lot of them are trading both directions. I think ENOV was the only one that I traded just bullish. They're the ones I'm like, look, I don't know what this market wants to do. We've got stocks going up, stocks going down. We have 30%. We have 30% of S&P stocks this year have gone up over 20% or down over 20%. That is nuts. And meanwhile, the S&P is like, we're just not going anywhere. That's fine. It's really crazy. So we have 6+ trades running. A lot of them are both directions. Just give us some movement, give us some direction, and we'll get paid. Okay, Drazen, I sent your email. You sent me an email. I sent you that to the team yesterday. No, you're good, man. So you were in class yesterday? Did you join class yesterday? Give me, you know what? Did you jump in class yesterday with me? Because okay, let me do this. I'm gonna send you the Telegram link. All right, I'm gonna send you an email right now. Pinch Point. Okay. I'm sending you that Telegram. That is for the Pinch Point alerts. Okay, so hopefully that's a gap filler. Like the team will get you added for the classrooms, but that Telegram should be open, and you can see the history. We have the trades I took this morning on IWM pending orders. SMCI was filled. BY, like these are still good trades. You can take them today. Just make sure you're not paying. I'd say don't pay more than like 5 cents more than what I did. If you pay less than what I did, great. Pay less than what I did, but I'm taking all these trades. So I go back to the SPY. So starting on the 18th. 1, 2, 3, 4. I've got 4, 5 for AVGO. 6, 7, 8, 9, 10, 11, 12 with IWM. Some pending orders, some filled, but they're all there. Cool. Okay. All right. Good stuff, good stuff, good stuff. All right, very nice. Hanging out for the day, testing the top side of our expected move. We will see if it holds. I'm not going to be brave enough to call the top here today. I'm just going to cheer on everyone's trade. If you're still holding the 69.10, the 69.15, the 69.20 or 25, I will be, putting my jazz fingers and my voodoo doll to keep prices down below that 69.14 level. Chuck says, can you look and tell me what trade that expires on the 27th of Feb? It's probably an engineered options, Chuck. I'm guessing. Because the 27th should be, that's next Friday. Let me see what I have out for those trades. Let's go DTE. So March 20th, 27th. I've got some engineered option trades for the 27th. We got some monthlies in there. That's the only expiration that I have. So I have an engineered option trade for the 27th. That's an end of the month. Yeah, it's an end of the month engineered. Yep. So it should be an XSP trade. So if I go, let me see if I have SPX. I might have a couple of those monthlies as well. Hang on a second. So SPX for the 27th. Got lots of SPX trades here. A lot of those are waterfalls. That one is for the end of the month. End of the month. End of the month. And then XSP. There it is. End of the month. That's an XSP trade. End of the month. This one expires on Monday next week. So by next week, are we going to stay above 682? There's about a 85% chance that it does. So that was looking pretty good for another kind of 1-to-1. We got filled in that this week. So we could have another winner for engineered options coming on Monday. So we'll keep an eye on that one, and then another one for the month. So yeah, we got some expirations. That's it, but it's engineered options. That's what I'm seeing. That's it. Cool. Okie dokie. Anything else for today? It's a bear call spread. Shouldn't be a bear call spread. If we're in engineered options, that's a bull put spread, my friend. Not a bear call spread. It's a bull put spread. Should be a credit spread. Looking for price to go up. Okay, yeah. All right, I think that'll wrap it up here for today's daily profit plan. Thanks for tuning in. More stuff to watch. So, I'll keep an eye on things for the day. Are we breaking above the market maker move? Are we not? Are we staying inside the range? Like I said, I don't want to see anybody get in too much trouble here at the top. So hopefully the market respects that. If it creeps higher, defense isn't a bad trade. If it creeps higher, like throwing in a butterfly spread is not a bad trade. Even if it's a wash, even if it's, the hard part is if it's going to be a slow grind, those broken wings don't get filled. If I'm going 10 wide on a broken wing to get that profit trap, it typically doesn't fill. A 5 wide gets filled, but the 5 wide is obviously very, very precise. Anyway, a butterfly spread, it's like if I got in for a daily profit play at like $1.50, I need to change the font here. If I go $1.50 on the daily profit plays, I'll put DPP here. If I was able to get a trade that maybe for $1, maybe for less than $1, I can make up to, $15 profit, even up to, $20 profit. I know that's wishful thinking. I know it's hard for the market to stay here for the day, but even if it offsets some of the risk, it is worth keeping your daily profit play risk small, right? It's not easy. You can obviously accept the risk as is and just trade Monday. If the market is here to close the day, Monday, we should be trading daily profit play without question. Inefficiencies in this market is going to happen, but typically the market is so smart to turn right back around because market makers can't afford to let 0DT roll. Okay. So, I don't want it to do that, but if we respect this high, what could happen is we could have the market do something like this today. The market may drift up here and find a resistance level and still close less than 69.15 on the day. I could absolutely see that happening. So what I might end up doing, and this might be a low risk trade, but if I get a trade up here where I did, let's say like a, 68, I don't know, I'll do something kind of wacky here. Let's say that the market comes up to like 69.30 or 40. I might do it. Let's just say 69, we'll say 69.40. If I sell a 68.40, okay, if I do a 68.40 sell call and a 69.40 buy call, and I do this for, it's 100 wide. If I can do this for like 97.50 or $97, I'm risking $300. All I need price to do is fall to the end of the day. And it is up to 10 grand in profit. That's a lot to ask. It's not going to happen probably, but even if I get this thing to fall 10 points, 15 points, I can still turn that into a very low risk trade for a high reward. Okay. So I'm going to set a chart alarm up into this like maybe 30 zone, 30 to 40. Because if it gets up there, I'm pretty tempted to take a sell into the end of the day. 6935. Yeah, I might take a stab at that by the end of the day. But for everyone that has the call side at 69, 10, 15, 20, I obviously am hoping that price just doesn't go higher. Okay. So we'll keep it on that. All right. I will let you go. We'll talk soon. Bye.